Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. So for the past few weeks, you could say 1 month, you could say even since mid-May, the evidence of the market has been gradually improving, really since mid-June. But starting then, that's when we saw the leaders of the bear move, which is really growth stocks and the ARK fund and all that stuff, really stopped leading. They didn't confirm a new low in June. And since then, we've seen some baby steps from the market, absorbing bad news, a few stocks kind of getting above resistance and holding, some improvement from the broad market. And then this week, our intermediate term trend model, which we call the Cabot Tides, turned positive. So to us, this is a reason to become a little bit more constructive to the market. If you've been highly defensive, you put a little bit of money to work and see how it goes. Period. Okay, full stop. It's a good thing. Next sentence, though, we're also not going to ignore the rest of the evidence, which is like the longer term trend is still down for basically everything, whether it's stocks, sectors, indexes, growth funds, whatever. We still haven't really seen many stocks break out and ready to go, which is not unusual given the size of the decline in the indexes and especially potential leading growth stocks. And we really haven't seen the all clear quite yet from the broad market. So that's not to poo-poo the rally at all. Many big moves start out kind of a little disjointed, there's uncertainties here, blah, 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 and then they just kind of pick up steam going forward. So I'm a big believer in always sticking with the evidence. To me, the evidence has improved enough to put some money to work, but we're still overall defensive, but keeping our eyes really open every single day. And if the evidence keeps improving, if more stocks pop out of there, obviously if the indexes and, for me, growth funds and growth stocks do well, we'll quickly put money to work. If not, obviously we'll kind of back off or at least hold a bunch of cash and see how it plays out. I do think earnings season, obviously there's the Fed meeting next week, but earnings season I think will be key. If we see some stocks that have been sort of bottoming out pop out of there on big volume, that could be your sign that, okay, the sellers really are sold out and the buyers are stepping up, okay? In Cabot Growth Investors model portfolio, we were up to, I think, even low 90% cash at some point in the last month or two. We're down to 75%, which is still very defensive, but we have put a little bit of money to work. And like I said, we run a concentrated ship, so it wouldn't take us long to get at least more invested here in the next couple of weeks if things kick into gear. But I think it's time to put a couple of toes in the water and see how it goes. All right, enough of the preamble. Let's hop into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So here's the NASDAQ, and just this green line right here is the 25-day simple moving average. We do everything. We're pretty simple people here. And we just like to see the indexes above this line and the line trending up. What does that mean? It means you're above where you were 5 weeks ago. 5 weeks ago was somewhere down here. And to us, that's an intermediate term green light. It doesn't take a genius, though, just to step back and look at the overall picture. We're still miles below this black line, which is the 200-day line. And, just looking at the chart, cleaning it up, we're just kind of right into this resistance area, if you want to call it that, from the late May, early June rally. So again, that's not poo-pooing things. Every rally has to start somewhere. You're not going to all of a sudden be in a 1999 bull market after, 2 or 3 weeks of, more positive action. But at the same time, there's more proving that has to go on. Okay, I am recording this, by the way, late Friday morning as usual on July 22nd. But either way, so we did get this green light, and it did kind of, you can kind of see the NASDAQ's been trying to bottom out here basically since early May. Yes, it got kind of hit below those lows there in June, but it quickly snapped back, and it's been holding up despite bad earnings reports, the Fed, economic news, stuff like that. So I think it definitely looks like the market is starting to look ahead. We'll see how it plays out here going forward. And the good news is it's pretty broad here in terms of, it's not just like the NASDAQ doing well, which would be fine with me, but it's really everything. So here's the S&P 500. Same sort of pattern here. You see the 25-day line turning up. I'll look at the IWM Russell 2000, turning up. Mid caps, MDY, same sort of pattern, okay? A little bit more power there. New York Composite, I guess we could take a look at too. These are the 5 indexes we look in our intermediate term model. So they all look pretty similar. They all are in longer term downtrends still, but they're all now in intermediate term uptrends, and we'll kind of see how it develops from here. As I kind of, let me look at my notes here. Oh, so the other thing too is just, actually I wanted to pull up this. So on MarketSmith they have something called the IBD Mutual Fund Index. It's basically a bunch of growth, decent growth mutual funds or whatever. But one thing, I can't show this to you, but another thing that's been happening here is something our regression index, which is we look at the NASDAQ versus the XLP, which is defensive growth stocks versus defensive stocks. But just to give you a flavor, this is the mutual fund index for growth funds, and this is the relative performance line to the S&P 500. So not even defensive stocks, just S&P. And you can just see it bottomed back so far. It bottomed here in basically mid-May, and it's been kind of, chugging higher here since then. So that's a little bit of a change in character that, we noted a month ago that, these things didn't confirm on the downside. So again, let's see if that can continue. And you see it also in some of these, this is the QQQJ. They all kind of look similar now. The IPO fund, RPG, which is the Invesco kind of growth ETF. They all look pretty similar. Growth funds are outperforming a little bit here in the last few weeks, but they're all above the 25-day line. 25-day lines turned up. Longer-term trends still an issue, okay? Other things that I just noted here before I get into individual stocks. I mentioned a couple weeks ago that chip stocks were kind of the dog's dinner. And you can see even into early July, they were still lagging, really, on the downside. But this has been a pretty impressive recovery. Again, I'm not saying the index is going to do this. I'm all for it if it wants to do that. But it probably has to back and fill and all that. But just the kind of the vacuum of selling pressure here and the nice recovery back above the 50-day line, so on and so forth. Let's see how that goes. That's certainly a positive. Obviously, if we come in next week and we're back down here, not so good. But the longer it can kind of hold up here or build on this sort of recovery, the better for this sort of, the short-term evidence here. The other thing, too, is just on the mutual fund index side of things. This is the XLP, which is consumer staples. And I know some people email me, well, what about the dollar? And, it is what it is. When people want to buy defensive stocks, they can buy them. It's not doing badly or anything, but you can just see after, it really led the way here into year end. And then during this was this March, April rally. Let me just pull up the spiders here, not to go in 100 different directions. But, here was this was the last sort of real rally that we had. And obviously it failed. And you can see what the XLP was doing during that time. It was really leading the way higher, which it's not a death knell, but it's not really what you want to see. Obviously, it got hit here with the market down into May and June, and it's bounced, and it looks, it's not terrible. It's not worse than anything else in the market, but it's not leading the way higher here in the last month while the evidence has improved. Now, again, if XLP is up here in 3 weeks and the NASDAQ's kind of struggling, that might be a sign that institutions are still playing it safe. But to this point, early in the process, it looks more encouraging. Same sort of thing with the utility stocks, which are a little bit more interest rate sensitive. But despite the fact that long rates have come down here in the last month or whatever, you can just see, again, utility stocks, nice little rally, but really pulled back in here. So it doesn't look like, when you combine, the growth funds and the mutual fund index or whatever, with the XLP and stuff, it definitely seems like a little bit of a change in character for now compared to the last 6 or 8 months. So, that's just a fact, whether it continues or not, but I like to look at the evidence as it exists. The other thing I would just mention, and I don't trade on this is very tertiary, a couple of things, but, Goldman Sachs is it's a stock I keep an eye on. I've never really owned it much, but just because it's just sort of your bull market, blue chip sort of stock. Here was your blast off back in, this was the vaccine blast off in November 2020, had a big run, topped out. And you can see it's just been living below really the 10-week line. This red line is a 10-week line below the 200-day line. And who knows, what happens. But, the RP line did bottom out back there in May. And now you're seeing a big volume clue on earnings. And just looking at the action, it definitely looks, again, like a change in character. Is it out of the woods? Totally no. But I'm just seeing more of that, like Citigroup, another financial stock, huge volume clue in here. Morgan Stanley, I don't know if they've reported earnings yet. Yeah, I guess they have. So not quite as powerful, but I'm seeing a little bit more of that from some of these sort of financial blue chip names. They don't all look great or anything, but just something that I think is maybe a feather in the bull's cap. We'll see if it can continue, okay? I'd say as we head into individual stocks, the one thing I did want to say is right now, not only are we not seeing a ton of stocks break out quite yet, which isn't that unusual, but there's not a ton of liquid names, okay? So we're not seeing like the equivalent of a, Facebook or whatever, even when Facebook, 10 years ago when it wasn't as big as it is today, we're not seeing that sort of big liquid leader like the Twilio and all that stuff from, the last few years quite yet. Okay, it can happen, but I'm just saying that's, so when you're dealing with some of these stocks, they tend to be a little bit more on the small mid-cap side of things, which, little bit of a, not buyer beware, but with earnings season and stuff, if things do turn, they can turn quick. So just something to keep in mind. I will be looking for more liquid names going forward. But just to run through, there's a lot of setups, and a lot of them have earnings coming up, but I do like the look. So this is end phase. We've mentioned this before. It's done nothing here for whatever, year and a half, call it. So it's a nice setup here. You have higher lows more recently, so it definitely has been out. In fact, you can just look at the again with the relative performance line here, this blue line. You can just see this is relative to the S&P 500. So you can see the stock has been not just rallying for, bouncing off the bottom for 3 or 4 weeks, but it's been kind of consistently outperforming the market here for a while. They have earnings next, let's see, July 26th. So I think that's Tuesday, and it's just kind of fighting the fight here in resistance. And right in here, it's just been all over the place. So I don't know what to make of it, but it did have a shakeout last week. So we'll see. That's one, on the watch list. Some solar stocks look pretty good. Neurocrene Biosciences, this is one that has big earnings projections going forward. This is more of a bottoming structure, meaning it's not like it's at all-time highs here. But on the weekly chart, I've mentioned this before, it's kind of has this basing pattern in here, and it's been sort of tightening up a little bit. I won't say tight, but tightening up a little bit here in the mid to high 90s, and let's see if it can assault above 100. They have earnings here on August 4th. Excelsius, this is EXEL. Another profitable biotech. Again, hasn't done anything for a few years. Had a little bit of an uptrend here, got hit, but has this little basing structure. Again, you just kind of, I'm not necessarily a breakout player, so I don't want to make it sound like, oh, you buy it, 10 cents above here and you sell it, whatever. I'm not saying that. I'm just saying even if you never buy it, it's consolidating normally here after a nice thrust higher. Can it kind of resume going forward, whether it's on earnings or not? Celsius is definitely one of the, there's some buyout rumors here and or rumors that it might make a deal with Pepsi for distribution. This is CELH, which is the, energy drink. And the stock is kind of, again, you're getting some of these names that are kind of running into this old resistance area. So how it handles itself will be key. It's a little stretch to the upside coming in today. We'll see. But that's definitely been one that did pop out of here at the beginning of the month of July and has been, choppy with the market. You can see definitely volatile as heck. Moves around quite a bit, but has been holding its own and even stretching higher. So we'll see how that goes. Agilon, this was in top 10 trader last week, I think it was, not this week. But just seeing more, whether it's medical or even software stocks, seeing more kind of bottoming action. So recent IPO has a good few weeks, gets killed, but really just kind of has been bottoming out here for a few months. This was back in January. This was a January low. This was in May. So you can see it's been trying to bottom out here and now pushing above not just the 10-week but the 50-day line. Again, not your most liquid thing. It's liquid enough, and there's some old overhead in here. So we're still seeing stocks hesitate when they hit resistance, to be clear. But let's see what happens. It's got earnings coming out on the 4th of August. Does it pull back, chill out, break out? We'll see what happens. BRZE, I'm not sure I've mentioned this on the video, but it's kind of a cool story. Software company, customer engagement. Again, recent IPO, got destroyed. Trying to bottom out for a few months, now pushing above some moving averages, but again on the daily chart it kind of ran into this level and is backing off. So we'll see how it goes. So far it's not unusual to see things hit resistance and back off. What we have seen recently is when they back off, they haven't melted down. They've been sort of consolidating. Obviously, if we start to see a few stocks hit resistance and just implode, that would be something different. Okay, just as an example of that, this is Li Auto, which still looks okay, but this had a huge run. It looks okay overall because it had a huge run. But you can see this week it kind of tested this resistance area, and now it's down pretty decently on big volume. On the daily chart, you can see there. So we're still seeing some of this action, and that's kind of a hallmark of a bear phase. We'd want to see that change, obviously, but before we put too much money to work. This is DUOL, Duolingo. Again, software name, language, bottomed out for a few months. Trying to poke above resistance here, fighting the fight. We'll see how it goes. Again, I think earnings are going to tell the tale for all these, not the Fed, August 4th. But again, kind of runs into some resistance here, and it's having issues, but it's not melting down. If it can just kind of hold its own, maybe it has another, catch its breath. It has another chance of moving up. FIVN, I'm just mentioning this because we are seeing, again, with these, not even IPOs, this is sort of a what am I thinking of? Like a customer contact software and stuff like that. It's been a great growth company, even though it's kind of a smaller cap. You can see the sales growth here, consistently 30% pretty much every quarter. But it got destroyed. I think it was going to get bought out by Twilio. That deal went up in smoke. But again, it's been trying to bottom out here really for a few months, really since March. Now it's popping above some resistance. Yes, it's got a lot of overhead to chew through, but just we're seeing more of this. So can we continue to build on this? Obviously on earnings, can it pop on earnings, that sort of thing. Shockwave Medical, I like this one. We'll see what happens. Again, it's up here into resistance, but there's not many companies with this sort of sales and earnings growth and estimates and growing sponsorship. And it's been a leader here before, and it's gotten whacked here, which is good, I think, in terms of a reset. But it's really been almost kind of like end phase. Here was the relative to the market. Here was the low back in January, higher low. It's been kind of outperforming here for 2 months, pretty persistently. This is going to be maybe 5 weeks up in a row. So I mean that's a pretty good sign here in the middle of a tough market. So we'll see how that goes. Got earnings here in a couple of weeks. A couple other ideas just to run by you. Housing, we are maybe in that part of the cycle. I'm not an economics guy, but the market looks ahead to the Fed stopping raising rates and maybe even cutting. So long-term rates topped out maybe a month ago at this point. And you're seeing, even though housing numbers right now are terrible, this is the ITB, which is sort of the home building index. And there's some names in the group. I won't get into them. Some look a little bit better than others, but they all generally swim together. So you kind of had it looked like it was trying to bottom out here. It had this big, decline to new lows in June, but maybe now that was sort of a shakeout. We'll see how it goes here. Obviously, there's work to do like everything else in the market, but just kind of noticing that. Couple more names. Commodities are still tough, but some coal names still look good. This is ARLP. This was in top 10 a couple weeks ago, I think. You're not in the first inning of the advance, obviously, but the fact that you have pretty much every commodity stock, not to mention everything else in the market, finally getting hit during the last couple of months, and something like this holding up. And there's a couple other coal names that are doing okay. That's certainly something noteworthy. And last but not least, back on the sort of the turnaround front, but not sort of technology. This is OLLI's Bargain Outlet, which might have a little defensive quality to it in terms of the economy, cheap stuff and all that. But it's more of a turnaround situation. It had a couple of waves down here, longer term, but it's really changed character, higher low. Obviously, it's accelerated higher, and now it's kind of had this nice, on the daily chart anyway, pull back in here. Obviously, it's from 45 to 70. It could definitely rest a little bit longer, let some moving averages catch up for sure. But overall, this looks like a pretty tidy, consolidation in here relative to the advance. So just back to the market, I think it is what it is. The evidence is improved. I don't ignore the evidence. I don't ignore indicators. So with our Cabot tides, the intermediate term trend turning positive, we're putting a little bit of money to work. But it's different when, even in 2020 when we got the buy signals, there was a lot of growth stocks that were looking good, really acting peppy and ready to go. And not that we went fully invested right quick or anything like that, but it was easy to find things to buy. Right now, especially with earnings season right in the thick of it here, so we got things reporting in the next week or two, I think it's best to start small, go slow, that whole thing. But I do think it's important to listen to the evidence, put some money to work, and then just keep your eyes open. We'll probably know within a week or two whether this is just, maybe this is just another bear rally and we fail. Maybe it's just a bottom building process and we chop around. Maybe this is just it, and the market's looking ahead to, great economic times later this year and a Fed that's, really much more quiet than it is today. Who knows? But I think we'll know within a couple of weeks, especially with earnings season. But right now, I think it's important to respect what's going on, do a little buying, and then see where it goes. So it's good to have a little sunshine here. We're enjoying it. And then just stay in touch, and we'll let you know what to do from here. Okay, that's all the time I have for today. As always, thanks for listening, and come by again next week for another Cabot Weekly Review.